Ethereum has long been known as the programmable blockchain, the engine powering decentralized applications, smart contracts, and the explosion of decentralized finance. But in July 2025, a new mantle is being draped over ETH's shoulders. That of a store of value, when Fidelity, the $5.5 trillion asset management behemoth, declared ETH worthy of comparison to sovereign currencies and legitimate wealth preservation, the market sat up and took notice. In its latest institutional research note, Fidelity stated unequivocally, ETH is used to pay for every transaction on the Ethereum blockchain, regardless of the type of transaction. ETH can serve as a medium of exchange and a store of value. This framing is profoundly significant. Traditionally, Bitcoin has held the narrative for digital gold, the scarce, deflationary asset immune to inflationary monetary policy. Ethereum, by contrast, has been pigeonholed as digital oil, a consumptive resource token that funds activity rather than preserves capital. Fidelity's report breaks that mold, positioning ETH alongside fiat currencies and government bonds. Moreover, Fidelity argues that native blockchain currencies deserve to be compared not to technology stocks, but to the economic output of nations. If Bitcoin is the US dollar, then Ethereum is akin to a dynamic, emerging economy with its own monetary policy via fee-burning EIP 1559, fiscal stimulus protocol rewards, and real-time GDP transaction volume. The timing of this endorsement is no accident. Throughout 2024, ETH endured its harshest relative bear market since the merge, as Bitcoin surged toward its $70,000. Ethereum lagged, losing nearly 70% of its BTC-denominated value in seeding narrative ground to newer Layer 1, south like Solana. Traders questioned whether Ethereum could ever reclaim its mantle as the premier smart contract platform, let alone challenge Bitcoin's store value thesis. But Fidelity's report arrives at a moment when fundamentals are improving. Deflationary pressure. Since EIP 1559's fee burn mechanism activated, over 11 million ETH has been burned, creating sustained deflationary pressure during periods of network congestion. Network activity, daily transaction counts have hovered near 1.2 million, levels not seen since 2020, one driven by stablecoin minting, DeFi lending, and the rise of on-chain tokenized equities. Institutional products. Spot Ethereum ETFs now rival their Bitcoin counterparts. With over $4 billion in combined AUM, and open interest in ETH futures has soared by 7% in the past month while BTC's declined slightly. When Fidelity's note hit, ETH instantly reacted, a 2.8% jump to $2,600, followed by a 6% intraday surge to $2,770. More tellingly, Ethereum surpassed Bitcoin in daily trading volume on major exchanges. According to Cohen-Lasson, extraordinary reversal of the long-standing BTC dominance paradigm. Let's drill into the derivatives data. Ethereum's open interest OI in perpetual and quarterly futures climbed 7% over the past 30 days. That measure, often sidelined in favor of spot flows, matters because rising OI in tandem with price appreciation signals fresh capital committing to the trend. It's not just legacy positions unwinding. Contrast that with Bitcoin's story, BTC futures. OI dipped by 0.18%, a minor contraction that speaks to either profit-taking at higher levels or caution as BTC nears its own ETH. By comparison, ETH's derivatives trading volume skyrocketed to $59 billion last week, roughly $3 billion. More than Bitcoin? These figures suggest that speculative and institutional actors alike are rotating into Ethereum in hopes of higher short-term returns. Options markets reinforce this narrative. The put-call ratio for ETH options expiring in Q3 stands at 0.44, indicating a clear dominance of call bullish open interest over bearish puts. Most upside strikes cluster at $2,800 and $3,200. While the so-called maximum pain, the strike where most options expire worthless, is centered around $2,000. In other words, Options traders are placing their chips on a breakout above $3,000, with some envisioning a run to $3,200 or beyond. From a technical standpoint, Ethereum is poised at a crucial inflection zone. Key levels to watch. Support. The 20-day IMA sits near $2,650. Reinforced by volume profile nodes from June consolidation. Resistance. Short-term upticks have stalled at $2,800, exactly where the open interest clusters. Breaking and closing above that level will flip old supply into new demand. Classic break and retest setup. Upside projection. A sustained move above $2,800 targets the psychological $3,000 level, followed by a measured move to $3,200, derived from the height of the recent consolidation range. Moreover, the RSI on daily charts is retreating from overbought territory, offering fresh momentum room. The MACD histogram has just turned positive, hinting at a bullish crossover in the coming days. Together, these indicators suggest that the path of least resistance favors the upside provided ETH holds. The $2,650 support level, technicals tell a compelling story. But Ethereum's rally is also built on powerful macro and narrative pillars. Stablecoin boom. Over $150 billion in dollar-pegged tokens now reside on Ethereum, exceeding volumes on any other blockchain. As DeFi protocols, exchanges, and money market pools favor stablecoins for liquidity, ETH becomes the de facto settlement and collateral layer. On-chain. Capital markets, academic research, and new regulatory frameworks have paved the way for tokenized equities and real-world asset RWA vaults on-chain. Fidelity itself has tokenized a pilot group of corporate bonds on Ethereum, demonstrating institutional viability. Protocol upgrades with IP 4844 proto-dank shirting on the horizon. Gas fees are set to drop even further, turbocharging Layer 2 adoption and cross-chain integrations. This upgrade promises to cement Ethereum's lead in throughput and cost. Efficiency. Regulatory clarity. U.S. legislation, like the Clarity Act and the Genius Act, is poised to whitelist stablecoin issuance and demarcate securities versus commodities crucial. Steps that will attract even more institutional flows into ETH products. Narrative. Evolution, as Fidelity's report reframes ETH as a sovereign economic asset. The marketing narrative shifts from fuel to treasury reserve. Thought leaders from Mariana Mazzucato to Milton Friedman have weighed in, arguing that decentralized native currencies will underlie tomorrow's digital economies. No bullish thesis is complete without acknowledging potential headwinds. Regulatory. Overreach. Broad AI or DeFi crackdowns could inadvertently ensnare Ethereum-based projects. Macro shocks. A sudden Fed hawkish pivot or systemic banking crisis could drain risk assets, including technical delays. Any postponement of key upgrades like proto-dank shirting could dent confidence in Ethereum. Scaling narrative competition. Rising Layer 1 rivals or a pivot back to Bitcoin's store of value narrative could steal some spotlight away from ETH. That said, Ethereum's resilience through previous market shocks and it's expanding. Institutional moats suggest these risks are increasingly priced in by savvy investors. Pulling it all together, the most likely near-term sequence plays out as follows. Hold above 20-day E-Matilda. $2,650 break and close above $2,800. Prior supply node retests $2,800 as support. Confirmation of breakout run to $3,000 psychological milestone. Renewal of FOMO extend to $3,200 measured move target aligned with options flow. If Ethereum can accomplish these steps before the end of Q3, it will not only validate the new store of value thesis, but also solidify ETH's place as the ETH. Second pillar of crypto. Standing alongside Bitcoin yet commanding its own narrative and return profile, Ethereum's journey from fuel token to recognized digital reserve asset is nothing short of revolutionary. When Fidelity, a titan of traditional finance, publicly elevates ETH to the same conversation as fiat currencies and sovereign bonds, it signifies a tectonic shift in Wall Street's approach to digital assets. Couple that endorsement with surging open interest, record derivatives volume, bullish options skew, structural network upgrades, and a tidal wave of stablecoin activity. And it's clear. Ethereum is emerging as a bona fide store of value. The coming days and weeks will test this thesis. But if ETH holds its support levels, breaks above $2,800, and sustains the rally toward the next targets at $3,000 and $3,200, it will accomplish something almost unthinkable. Just 18 months ago, outpacing Bitcoin in both narrative and performance. As part of the evolving architecture of global finance, in that scenario, $3,200 won't be the final frontier, it will be the opening salvo of Ethereum's next great chapter. And as Wall Street's embrace turns into full-blown adoption, Ethereum's value proposition could reshape how the world thinks about money, wealth, and the very nature of sovereignty in a digital age.